What's going on, guys? Welcome to the Venture Coiners podcast. Today I am joined by Kevin of Delphi Digital. Kevin, what's going on, man?
What's going on, man?
Not a whole lot. Excited to have you on. You guys have been pushing out research at an incredible pace. You're also making waves in the industry. I listened to Laura Shin's podcast of Vitalik, and he immediately said he recognized your research. And you have Palm saying you're simply the best research in crypto. Maybe a bit biased there, but what's the team's background? Where did you guys come from? You know, was it a unit in traditional finance? I know a lot of you guys have that background. Were you a team there, and then you came to crypto? And when did you guys come in?
Yeah, no, I appreciate having me on. Some quick background on us. As you mentioned, we were all traditional finance guys. Four of my, or I should say three of my other partners are ex-Bloomberg guys as well as myself. So that's kind of where we met. But we launched Delphi officially back about 6-7 months ago in September 2018. We've been involved in this space for a few years now, more so on kind of the personal investing side of things. I started getting interested in Bitcoin and kind of the crypto, I guess you'd say, narrative. First I came across was actually when I was still kind of an undergrad back in 2012, 2013. I mean, all the big financial media organizations, Bloomberg, CNBC, were picking it up as Bitcoin, prices spiked above 1,000. And I'll be, perfectly honest, at that time, I totally kind of disregarded it and, considered it to be fake internet money and just kind of moved on. And then, as the years went on, got out of school, I studied finance and economics. Bitcoin and the crypto narrative again was kind of suppressed but didn't die. And then started getting, pretty interested in it, mid to late 2016. And that's where three of my partners who were at Bloomberg at the time, we all started kind of making small allocations to the space, Bitcoin, Ether, just started to figure out exactly kind of how this ecosystem was developing. And then eventually, we kind of fell down the crypto rabbit hole, as a lot of people like to say. And we started putting the wheels in motion to create Delphi and launch, as I mentioned, back in September. We started putting the wheels in motion probably early summer of 2018. Okay. And then launched and then got connected after we launched pretty shortly after with Anthony Pompliano, or as most people know him as Pomp, simply the best podcast in crypto, right? We got connected with Pomp, and he introduced us actually to Tom Shaughnessy over 51%. And, we sat down with Tom and within an hour, we kind of hit it off, and we knew that the elephant in the room was we were both kind of competitors trying to tackle the same market. But it made a lot more sense for us to kind of combine forces and try and, create this, really premier institutional grade research offering, and combine both of our efforts. So we merged with the 51% guys earlier this year, back in February, and we've pretty much been off of the races since.
Definitely. And that's how I've noticed you. I think I first saw you when you joined with Pomp and Tom. I should have been following before, because the stuff you guys have been putting out has just been wild. And at that pace, like I said, I think everyone in crypto moves kind of 24/7. They're working and they move at a fast pace, but you guys are pushing out stuff in such depth that it's been really impressive. And that's why I wanted to have you on. Before we get into that research, though, I do want you to explain maybe a little bit more for people that are unfamiliar with Delphi. What does the research consist of? What are you guys pushing out? Is it focused on one token? Is it more technical charting stuff, or is it more fundamental?
Yeah, great question. So, take a step back. When we launched Delphi, what we wanted to do again was kind of create this sell side type of research shop that was institutional grade, that we were used to seeing, from our traditional finance and investing jobs prior to this. And so, the research that we typically tend to focus on is again, bringing transparency to this market, almost operating as skeptics first, kind of this guilty until proven innocent type model, which again is very, very different than I think what you saw, across social media and across, some other platforms, in mid 2017, late 2017, you had that whole ICO boom, and then the subsequent bust prices pretty drastically to where they are today. And so, again, when we were doing our own kind of personal investing in this space, and the more and more kind of capital we started to allocate, and the more we started to understand this ecosystem, we really couldn't find that true professional grade research that we were looking for, that we were so used to, seeing in traditional equity markets, for example. So what we do is a mixture of things. We have weekly market commentary, which touches on kind of big themes that we're looking at. We'll look at Bitcoin versus traditional asset classes. We'll look at some technical indicators that we follow. We'll look at momentum and what's kind of gaining momentum, what's losing momentum within the kind of large crypto asset space. And then we'll touch on, as I mentioned, any themes that we think people should be watching for We also highlight, we have thematic insights where we'll go into specific sectors or topics. We just did one on decentralized finance, for example, which obviously has gained a lot of popularity recently. And then kind of more on the institutional side, we do really in-depth deep dives on different token reports. And there we're really trying to do kind of what we think sets us apart, and is the niche we found is that, again, leveraging our backgrounds, trying to put valuation frameworks around this stuff, right? There's a lot of really good content out there, and there's a lot of great thought leadership out there, and trying to kind of pioneer, the way in which crypto assets in general can start to be valued, or at least thought of, from a traditional either portfolio management perspective, or kind of from a bottom-up perspective, looking at some of these digital assets and trying to figure out, are they able to accrue value in some type of way? So again, kind of trying to bring more transparency to this market, and at the same time, trying to identify those opportunities and more importantly, the risks that come with, getting into this space.
It makes sense. I think the best way that I think about it, and correct me if I'm wrong, there's a lot of research that's put out, whether it is charting or whether it's investigative journalism. I think what you guys are focused on is more of kind of that valuation framework and applying your research, and then from that coming up with an actual investment thesis and actual actionable research, as opposed to kind of just telling the narrative or explaining the data. It actually has an investable or an actionable thesis. Is that correct?
Yeah, no, you hit the nail on the head. We pride ourselves on trying to be as actionable as possible. And again, the narratives within any type of investment or anything that you're looking at, the narrative certainly plays a role for sure. But again, tying it back to valuation frameworks, trying to, again, be able to put some type of model around these things is certainly what we try and focus on.
Cool. One of the models that I want to talk about is a thread that you guys just put out. I also think it was in your weekly report. And it's especially relevant because over my left-hand shoulder, we have the Bitcoin price scrolling by my ticker. Bitcoin's been ticking up for almost a month straight, and we're hitting 4,100. It's a level we've reached 3 times in the past 3 months, every single time rejected. You guys put out a piece, and I'll let you kind of explain that piece, but it was looking at whether or not the Bitcoin bottom is in, or projecting out when you think that Bitcoin bottom is in, and using UTXOs, or kind of looking at valuing or explaining whether Bitcoin is cheap versus expensive currently. Can you talk about that framework a little bit?
Yeah, for sure. And it's the question, it's probably the most, it's probably the question we've gotten asked most, I would say, in the last, month or so, especially as you've had this kind of recent rebound in crypto assets, is the bottom end, right? And it's always difficult. And, I'll preface with, we absolutely could, retest or even break through those, recent December lows. So this by no means is I would say definitive. But, from our analysis and using UTXO, kind of looking at the age bands and being able to figure out, what the accumulation trends are and what types of holders in terms of the length of time that they're actually holding Bitcoin, looking at the selling pressure from there, we came out with a report back in December, whether that was within our kind of state of Bitcoin report, where we laid out, the long-term value proposition of Bitcoin from a number of different perspectives. And one of the things we included in our kind of more short-term outlook was this UTXO analysis. And basically what we were seeing was that, in prior trends, typically what you see is this accumulation period. Even as Bitcoin prices continue to fall, you start to see these kind of 1 year, plus holders start to accumulate, and that trend kind of increases even as Bitcoin, continues to sell off. And then at a certain point, you kind of see, a bit of capitulation with some of the longer term holders in that 3 to 5 year kind of age band start to sell off. And that was kind of the final domino to fall, recently within this first quarter. That kind of gave us the confidence to come out and say, listen, we think that the bottom, has been put in for Bitcoin, just based on these trends and based on, history. That's if history serves as any good guide, the bottom would be in, just based on, how these accumulation trends have been moving.
Yep. So that accumulation is happening from the people that have been holding for 3 or 5 years. They're selling off, and then you can see in the UTXOs that all of a sudden those are moving again. Therefore, kind of, I think the line that I saw was you had a separate line for people that have pretty much held for 3 months, people that have held for a year, people that have held for 3 or 5 years. And that number of people that have held for 3 or 5 years, it was almost like the capitulation or kind of the climax of selling, where even they were panicking, and that kind of signals the trend change.
Exactly. It lined up, almost perfectly earlier, with, you had that Q4 sell off, so we were able to kind of, draw some parallels to looking at those longer term UTXO age bands to see which kind of part of the, I guess you'd say, Bitcoin holder, dynamics, which part of that market was really selling off. And it's interesting because you see this accumulation period happen, and then it peaks, it almost starts to roll over, as Bitcoin prices rise, because again, as people start to realize, a good amount of gains, you start to actually see some of these longer term holders sell off as, prices start to accelerate. So we're kind of still in that upward trend accumulation phase, as of right now.
I'd be curious, what did you guys, or have you ran the same UTXO analysis on local tops or on the actual top? Did you see any patterns that stick out, or kind of a major theme between coins were either being sold off? Was it a similar pattern, meaning were the 3 and 5 year holders actually exiting or buying more towards the top? Were they kind of mistiming it like they just did the bottom? Or what was anything you saw there? Did you study that?
Yeah, so from a time perspective, it seems these cycles have gotten a bit longer, as you would expect as you go on, right? As these Bitcoin, we'll call them Bitcoin cycles, as this market matures, you'd expect that cycle to get a little bit longer. But what is interesting is that when you look at, again, the kind of age bands, and specifically kind of what we'll consider these longer term holders, what you're seeing is, as accumulation happens on the way on as prices kind of bottom out, make that bottoming process, you do see, a certain point where some of the, what we'll call, bag holders, for lack of a better word,
yep,
from the prior cycles really start to kind of sell off as they start to realize gains on the new uptrend in the next cycle, right? If that makes sense.
Yep.
So that's one of the kind of big trends that we've seen. And again, trend right now is our friend in terms of, our short-term outlook. Because we just recently reran that UTXO analysis for our March Bitcoin monthly, and the trend has continued to be our friend and continues to trend higher.
Okay. And going with the trend picking up in Bitcoin, correlations are incredibly high in crypto. We've also seen large caps, come back. In some ways, they actually led, and they've kind of outpaced Bitcoin for a little bit of December and January, and now Bitcoin's catching up. Correlations are always really high in crypto, but you guys published a weekly report that I was just reading as I was catching up on your stuff that says those correlations might be breaking down. Is that a good thing for the market? Does that indicate strength, or does that kind of show weakness in trend?
I think it's a good thing for the market because, if you run a parallel to, let's say, equity markets, right? Typically within, the U.S. equity market, correlations tend to rise between stocks when you have times of market turmoil or when volatility spikes, right?
Yep.
As stocks sell off, correlations kind of move towards one because everything kind of sells off in tandem. And so that's what we've seen really since that parabolic price move, kind of the price bubble, back again late 2017, early 2018, and then the subsequent price crash. As you would expect, correlations have remained extremely high because again you're starting to see you had that long downward trend, that long kind of rolling bear market. And so you couldn't really, crypto assets, sure, you still had these kind of idiosyncratic factors that would affect one or the other, and you would see certain pops here and there. But, we got to a certain point, I'm sure, as you've been following, where you simply didn't see, the idiosyncratic news or I'll say fundamentals driving any of these, smaller or medium-sized crypto assets. And they were really, really heavily correlated and moving with, Bitcoin and Ether and things of that nature. So what I think is that as you see correlations, and again, they still remain, near almost extreme highs or all-time highs. But as you see that correlation kind of start to roll over, the intra-market correlations roll over, you're going to start to see more dispersion in the market, start to see more kind of, again, idiosyncratic factors sort of affect some of these crypto assets. And it becomes more of, a market where active management really starts to show its value, right? Because you're able to differentiate between, what's kind of more on the vaporware side of things, or doesn't necessarily have a product, or doesn't really necessarily can drive value or accrue value long term, versus some of these really interesting products that have come out recently or in the last 12 months that certainly do have that value use case.
Definitely, but the one thing that I think about with that idiosyncratic coming back and active management playing a role, since maybe things actually are reacting to news specific to a certain coin or to a certain project, is in the case of a new partnership, let's say, being announced, and I've seen this 5 or 10 times in the short time that I've been in crypto. Someone will announce a partnership, and it really just means that now they're a client of AWS, or now they're a client of something else, and then actually pushes price. Is that a good thing, or it's hard to say?
It is hard to say. I mean, I would say probably a blanket statement, not the best thing, right? But I think this narrative of, one thing's more, just decentralized than something else, it's almost depending on the use case and depending again on, different scaling solutions. And now you've got all these layer 2 scaling solutions being built on things like Ethereum. I think you can have some of these trade-offs, and it's not necessarily binary where it's either centralized or decentralized, right? A good kind of example, and something, one of the projects that we've been looking at and we've done some work on is Loom Network, and they're basically trying to create these side chains for Ethereum, right? It's kind of layer 2 scaling solution, and their default consensus algorithm is delegated proof of stake, right? Which a lot of people obviously have a lot of qualms with. But again, if you're using something like Plasma, and they've developed Plasma chains, if you're leveraging some technology that allows you to leverage the security of a larger, much more secure blockchain, well, then on the second layer, can you have something that's a bit more centralized in terms of the amount of validators that are staked, or the amount of validators that are contributing to that network, because you have the underlying security of something that's obviously a lot more centralized, like Ethereum. I don't think it's necessarily a binary argument between decentralized and centralized. So it's definitely I guess project specific or use case specific. But by and large, some of those partnerships I definitely think can get pulled out of context.
Yep. I'm glad you brought up that scale of decentralization versus centralization. I think you guys will admit you're not a maximalist, or you don't support kind of maximalism in any one sort. I think you're agnostic to whatever the data shows, and you're willing to kind of research what's fundamentally strong versus what's fundamentally weak, and let that kind of lead the way. Thinking about, though, whether fundamentals are actually driving this market, I'll use Loom as an example. Let's think about Loom, which is building out that delegated proof of stake, and you can clearly see that they have some kind of traction. They're actually I think they shipped code even before they launched, and then compare that to maybe a project that has little to no traction, but it's in kind of the same market cap group. And let's say that coin's run for 300 or 400% in the past month or so. I think a lot of the times what's different or so confusing in crypto is maybe things are so irrational that they're almost not trading on fundamentals. How does your team approach that, or how do you guys think about that, and how do you kind of account for that in your valuation frameworks, where, once again, I'm using Loom, but I could use anything. I could compare ETH and Tron, and someone will say Tron's better and someone will say ETH is better. It's a scale of, and there's trade-offs. But how do you compare a project that you think is fundamentally strong versus a project that you think is fundamentally weak, where the market might not even be considering those, and momentum and technicals could be playing a bigger role?
Yeah, no, it's a great question. It's certainly something that, within our research and within our reports, we try and actually, kind of segment that off, or break that off into two different segments of the report itself. Because to your point, this market is still, extremely inefficient. I can go into, a number of reasons why that is. But in the short term, you could have, something that's considered a competitor to something else that pops again 300, 400%, that really doesn't even, have a fundamental catalyst for why that is. If you look at something like Loom, what's interesting is, over the last really month or 6 weeks or so, since they recently opened up the ability for delegators, right? So anybody who's a Loom token holder to be able to delegate to some of their validators. You actually have seen pretty drastic outperformance of Loom compared to, Ether and Bitcoin, some of these other larger crypto assets. So it's tough to say, exactly that that's a fundamentally driven trade, right, in the near term. But it is something that, we'll account for and look into and say, okay, if this trend, continues, again, we're not going to come out and say that, this thing's going to go, 2x or 3x over the next, 6 months or something like that. A large part of the reports and the valuation work that we do is looking at these things on a longer term time basis, right? 5, maybe even 10 years, depending on, what project is we're looking at, and trying to, again, create valuation frameworks that you can actually wrap your head around how this thing could accrue value long term. But in the short term, it's certainly something we have to be aware of, because you can have kind of your fundamentals, and you can have kind of your pumpamentals or something like that can certainly drive prices, and momentum being such a strong factor in this market. You could have something that kind of takes off on a rumored tweet or something like that, and then the market picks it up because, again, people are so hungry for returns and for gains in this, especially those who have stuck around through kind of the parabolic price move and then the subsequent crash. There's so many people out there who are looking for that next kind of almost get rich trade idea. And obviously crypto being so inefficient, certainly can present those opportunities. So it is, long story short, it's still a very inefficient market, at least in the short term.
Thinking more about that short term, I just want to expand on this one more time. Considering a project like, I'm not going to pick on Loom anymore, but let's say we're looking at a project that has a 30 to 50 or $100 million market cap, and comparing that to something in the top 10 like Ethereum, do you think there's different betas for these coins, or do you guys kind of look at them like that? I know that's something that gets tossed around on Twitter a lot. It's something that I like to look at, and I think during periods of uptrends for alts, you do see those smaller caps outperform maybe the larger caps. Is that something you guys take into consideration, or is that ways that you kind of categorize these alts? Are you actually looking at them by large cap, mid cap, and saying, you know, these probably have a higher beta, or they'll be affected more if the market rises?
Yeah, no, it's great. It's something we do take into account, something we look at, especially in kind of that more weekly market commentary, type analysis where, for example, going back to, high intramarket correlations and maybe possibly those breaking down, get a bit more dispersion in this market. What you've seen historically is when those intramarket correlations do start to break down, you do tend to see, to your point, small caps or those smaller names really start to kind of take off, relative to their larger peers, even if you are, in this renewed uptrend. So beta is something certainly that we watch. We've done some work recently on even some of the larger crypto assets, like Litecoin's obviously been a huge outperformer recently, looking at kind of the upside volatility that's come back into this market, right? Because again, volatility oftentimes I think is put into one bucket, right? Where if something's more volatile, then it obviously is more risky, but that's kind of almost got it's almost a bad thing, right? That something's more volatile. Yeah. But on the flip side, downside volatility, obviously bad. But if you look at upside volatility, to your point, that's something where you expect it to have a beta far above 1 with Bitcoin. Yep. And you do get this renewed uptrend. You do start to see this early stages of a bull market, or some of these, crypto assets really start to move higher. You would want that upside volatility to be able to take advantage of that to outperform. There's no real benchmark in this space, as but let's call Bitcoin as the benchmark. Yeah. Certainly could outperform Bitcoin on the way up. So it is something that we definitely monitor and we definitely watch for in that kind of 3 to 6 month time frame.
Okay, and thinking past the 3 to 6 month. You talked about Bitcoin and you guys, considering all the probabilities and your model, the UTXO model, saying you think the bottom is likely in Q1 this year. What does your past 3 to 6 month outlook look like? And then also one other thing, since you guys all come from a finance background, does it rely on stocks doing well? Since it is a risk on asset, that's a research report you guys put out as well. Is it dependent on stocks doing well? Is it dependent on risk on assets doing well? Or is that just kind of an added bonus? Could Bitcoin perform well for the rest of the year, even if stocks and risk on assets do poorly?
Yeah, it's a great question. And I would say that I'm hesitant to say that Bitcoin could really outperform, just again, given how, nascent this technology is and this market is, and given how, how the correlations between Bitcoin and risk assets like equities have risen during times of, increased market volatility, traditional market volatility, and equity market sell-offs. That correlation certainly turns positive and tends to rise. I would be hesitant to say that Bitcoin could really drastically outperform, barring some type of, global currency crisis, which, I have very, very, very small chance that you get something like that over the next 12 months. So I do think that, in the near to intermediate term, you still have Bitcoin that's going to trade very much like a risk on asset because, if you think about it and kind of putting this in context, what's going on in global central policy land, you have the Fed kind of walking back. Now the market's not even pricing in really any rate hikes. In the U.S. for 2019, there's actually about a 0.25% chance that you get a rate cut by the end of this year, which is pretty crazy compared to where we were even just 6 months ago. You've got other global central banks like the ECB pushing out kind of their outlook or when they think they're going to be able to raise interest rates because the Eurozone continues to struggle with limited inflation, limited economic growth. So there's a number of kind of factors there that have taken the foot off the pedal when it comes to tighter monetary policy from a global central bank standpoint. And so what that does is, as you see, and you've seen it reflected in sovereign debt yields, when you see government bond yields drop, it pushes people further out the risk curve, right? Because now you're no longer getting, let's call that 3% yield in the 10-year, that falls below 2.5, 2.4. It pushes you into or makes, risk assets more attractive, like, stocks. And I think, or as a corollary to that, you're going to see, Bitcoin and crypto assets, again, assuming the recent trend continues, you're going to see, Bitcoin crypto assets catch a bid because, again, people are starved for not only just yield, but also starved for growth as kind of the global economic growth outlook, starts to slow.
Okay. And I think one of the continuing to consider the global economic landscape and where Bitcoin fits in there, there are so many theories about whether or not Bitcoin will replace the dollar, whether or not it's digital gold. And you guys, I think, have a little bit of a different view, or whether it's Delphi or just you personally. You talked about Bitcoin potentially being a reserve currency as opposed to replacing the dollar, which is something that I think is very, very, few chance. I see the use case of Bitcoin as a store of value. I understand the digital gold thesis. I don't think that global currencies are going to go away, though. Can global currencies exist and Bitcoin be a reserve currency kind of for the world? Can you explain that thesis?
Yeah, and I think it's one where may get some backlash on this, because there is this idea, obviously, from kind of a maximalist perspective, that Bitcoin's going to be this new universal currency that's used. And I'm totally in the camp that, listen, I understand and I truly believe in the value proposition of a digital, non-sovereign, censorship-resistant, store of value alternative to some of these fiat currencies, or some of these even reserve currencies like the U.S. dollar. But over the long term, and 10 years, 20 years, 30 years, I think we're going to get to a point, and this is where Bitcoin's going to kind of take off, or really the value proposition can become clear to people, is that as you hear constantly about this debt bubble, right? And what I will often say is that there is a process in place right now, that the underlying process is in place to dethrone, King Dollar, right? The amount of global trade that is denominated in dollars, you have commodity markets that are denominated in dollars. The dollar really, really is king. There's a number of kind of factors that are leading to, other major kind of not only just central banks, but governments to move away from that, right? Move away from the dependence on the dollar. But I don't think that's going to happen overnight. And so what's interesting is that if you have the debt bubble kind of catch up to not only just developing nations, but developed nations, right? And we're privileged being in the U.S. We haven't really gone through something like a true currency crisis like you're seeing in other parts of the world, like Venezuela being a really good example. We haven't seen that, right? So it's tough. It's difficult for some people to understand why a digital alternative to this, or a digital alternative to local kind of fiat currency, would even matter, or what the use case would be there. And so I think what you're going to see is that, as this kind of debt bubble catches up to, developed nations, is we're not able to produce enough, economic growth to really outgrow the debt bubble. We can't stoke that much inflation. I mean, we're struggling with that here today, even with, crazy easy monetary policy. I think what's going to happen is you're going to have this kind of this global devaluation of currency relative to other things, right? All currency, as from an FX standpoint, is relative to something else. So long term, could you see Bitcoin rise as kind of alternative, against non-sovereign, censorship resistant, store of value type asset that people move into, because it's a hedge against this kind of global currency devaluation? I mean, absolutely. I think gold again could also catch a bid, because that's one of the reasons why people hold gold as well, as that inflation hedge. The thing that's tough is I think that's much more of a longer term trend. And in the near term, what's difficult is that, it's tough to see what really dethrones the dollar in the near term, right? If global central banks as their reserve assets are going to move away from, the U.S. Treasury market, right, which is really what a large part of the central bank reserve assets consists of, because it yields something. If they're going to move away from that, right, which is arguably the safest or most liquid assets on the planet, what are they going to move into, right? If you look at the euro, we've talked about the euro zone obviously struggling with economic growth. We have Brexit, which is adversely affecting the pound, so that the near-term uncertainty from all the kind of fallout effects of that are not going to push people into trusting the pound as a alternative to the U.S. dollar. China is still relatively closed off compared to other reserve currency nations. So it's tough to see what that alternative is, right? So in the near term, I mean, you could still see a pretty strong dollar, or the dollar catch a bid, because there's simply no better alternative out there. And I think as governments and institutional investors and pension funds, and you get some sovereign wealth funds, as you start to see more and more big money really understand the value proposition behind Bitcoin, I think you can start to see it rise up as this kind of again digital alternative reserve asset. But in the near term, it's very difficult to see dethroning King Dollar, because the alternatives simply don't exist, and there's just not enough awareness about what Bitcoin's value proposition could be, and it has a very limited track record, right? It's compared to even some fiat currencies. I mean, a very limited track record. So to be able to put your trust into something like that, I think is going to take, a lot longer than most people think.
A lot longer, and I'm glad you brought up institutions. It's a funny word across Twitter and really across the whole industry, because it means a different thing to every single person you talk to. The average retail investor just thinks it's someone that's going to come magically buy everything and prices will go up. You talk to people from traditional finance, they're thinking more Wall Street firms, more large banks, and then you talk to asset management people and they're thinking kind of those endowments. For you guys, you're a lot closer to that scene, and honestly, what the research you're providing is so closely aligned to one of the things that does get them involved and maybe does understand kind of the long-term proposition you're talking about, whether or not it's short-term. You're more focused on the long-term proposition for Bitcoin. What does that look like for institutions when you're pitching to them? I know when we spoke before this, you've talked about part of the education process or thinking about it as kind of a call option on digital gold. Is that how you explain it to them? Kind of how you explain it to me is maybe it's not a short-term thing, but it is something that in the future, given our monetary kind of experiment we're going through right now, in the future, you need to be learning about this now. Hopefully you can get off zero now, because in the future this pays off. Is that how you're pitching it to them, or can you kind of explain that to me and explain it to everyone else? How are institutions seeing it? How are you explaining it?
No, absolutely. It's much more of a longer term type conversation, right? I mean, you do have some, these aren't obviously institutions, but you have some, kind of traditional family offices or traditional hedge funds coming in and wanting to take advantage of, the volatility within the crypto asset market. But when we're talking about institutions, again, like the endowments, the pension funds,
much bigger fish than kind of the short-term volatility players. They're not looking at they're not looking at the 4K breakout today. They're thinking like you were 3-5 years out. Where does this fit into kind of the global scene?
Yeah, and what's really interesting is, again, everything's all relative, right? So we talked about the rise of something to dethrone the dollar, right? Well, that's going to be relative because the dollar has to, be devalued against something else. When we talk to institutions about this kind of long-term value proposition of Bitcoin, really it goes outside of Bitcoin, but for the most part, most institutions are still stuck on trying to understand what Bitcoin is and what the value proposition is there. Yep. We've never gone into a meeting and said, hey, so all your fixed income investments, bet the house on Bitcoin and, set it and forget it, right? We're not saying to bet the yard on this revolution, so to speak. But what we do, put in context is if you're a pension fund, right? And let's say your required rate of return, the discount rate that you're using for your future liabilities is somewhere in the 7.5% to 8% range, right? So basically you're trying to make, or you need to make, 7.5% to 8% a year, in terms of return to be able to, grow that asset base, to be able to cover the future liabilities that you have, right? And if you're a public pension, you're paying out that pension money. What we do is we'll put it in context of other asset classes and what that traditional portfolio would look like. A lot of institutional investors have kind of gone for a bit further out the risk curve in terms of their venture capital investments. They're heavily involved with private equity, but if you kind of take a step back and look at some of the more publicly traded markets, like the equity markets, you look at the debt markets, specifically the government debt markets. One of the best predictors of what your 10-year performance on the U.S. 10-year U.S. Treasury is what is yielding today, right? So you have sub 3% yields there. If you look at the U.S. equity market, for example, valuations are a very, very tough, and I would say they're a very difficult timing mechanism, but over the long term, they're very good predictors of what your longer term performance is. Yep. So people have been talking about the S&P 500 and the U.S. equity market being overvalued for the last 5 years now, right? And if you sat on the sidelines, obviously you've been kicking yourself.
But I've heard, but for the past 2 or 3 years, they've said expected value 5-10 years out is negative.
Right, so exactly. And so when you look at it, we got a great chart that I can share with you and you can share around, where if you look at the subsequent in-year returns based on historical valuation levels, just looking at the 10-year CAPE ratio on the S&P 500, you can see the correlation is incredible, because when you have valuations at this level, your subsequent 10-year returns just look poor, right? We're at pretty stretched levels compared to history right now. So we start to frame it like that and we say, okay, where are you going to actually find the 7.5%, 8% yield? Can Bitcoin and maybe even some of these larger crypto assets or things that you're comfortable with, fit into a very, very small sliver of that portfolio? Again, because we think the asymmetric upside of this asset class is pretty incredible, right? There is a non-zero chance that all this kind of collapses and Bitcoin goes to zero, right? We have to just kind of come to grips with that. But again, we're not going into any meeting and saying, bet the house on this. It really is this kind of asymmetric upside trade that we see and we feel very confident in. And when you frame it in the perspective of what other traditional asset classes are going to be, expected to return or yield, over a 10-year time period, for example, that's when people start to really perk up, because again, that is a concern. And what we've seen the narrative kind of shift in these meetings is, even in the earlier days when we first launched, there was still almost kind of cool to, talk down about Bitcoin, right? Now it's kind of gotten to a point where everyone and their mother knows that, Bitcoin had a price bubble crash. It was off, 80% off its all-time high recently, dipping, I think, to like 85% off its all-time high, kind of bottoming out there in December. So it was no longer cool, really, to talk about Bitcoin being dead, right? It was kind of one of those almost unwritten, okay, we get it, Bitcoin's gone. And now the fact that it's not dead, right? The narrative has certainly shifted to people saying, okay, well, what if Bitcoin's not dead? What if crypto is not dead? What if there actually is something here because this thing simply won't go away? That's also kind of the narrative shift we've seen, where people are trying to come to us and say, okay, maybe we're not entirely convinced that we're going to put money behind this. We're not entirely convinced about the long-term value proposition, but we're open to having conversations about it. We're open to learn more about it. Yep. Whereas even 6 months ago, you had people, who were still very, very closed off to this, thought it was fake internet money, and didn't really even give it the time of day.
So it's almost the perfect storm of cyclical Bitcoin going through its bear market that it had to go to. And I think really the crypto market as a whole, because a lot of the run up was caused from that Ethereum and from kind of our own little credit boom we had of ICOs. It's also kind of lining up with the global macro scene of people looking out 5 or 10 years and saying, where does yield come from? I have to be in some kind of alternative, or at least putting some, or at least considering that alternative. And it seems like from a time, and kind of factoring in the new money timing, where it's just one of those things where Bitcoin is still in the early stage, even though everyone does know about it as a money relative to everything else, still very, very new.
Right. And to your point, I mean, the monetary policy experiment, a great way to put it, that's obviously become much more part of the kind of global macro narrative in the last few months as well, right? Because it's almost like the Fed started to raise rates, right? Everything was okay. And then all of a sudden the market, as soon as, there was concerns about, slower economic growth, you saw earnings expectations for U.S. equities, almost fall off a cliff back in Q4. Once you start to see that, tighter central bank policy was really kind of starting to wade into the market, the market pretty much threw a temper tantrum, right? So it's really interesting because most people are sitting there going, they're skeptical of this recent rebound in Q1, which was the best, quarter for stocks since, I think, 2009, and the best first quarter since 1998. People are still skeptical about that rally, saying, maybe it was just kind of, obviously it's a little more sensitive than a dead cat bounce. People are still skeptical about, okay, what happens now, right? The Fed is really kind of handcuffed. And God bless Jerome Powell, because I don't know anybody who would actually want to take up the role of, being Fed chair, because that job is just, sounds like an absolute nightmare. But they're between a rock and a hard place, right? There is no real right answer for them. And the market's starting to kind of price that in, I think.
I saw Yellen speak in San Francisco, and it's funny. I thought the same thing, but she actually spoke highly. She said it was still, I think, when she said if I could go back or what advice, and I think she still was happy with her decision. So
yeah, I mean, you are one of the probably arguably the most powerful person when it comes to financial markets. So I guess it does have its perks.
It has its perks. Anyways. That perfect storm is going to be fascinating to cover for the rest of the year, especially after you guys have put out your research where you think the bottom's in, where Bitcoin now fits in for the next year. I know we're talking 5 to 10 years out, but I think this next year will be especially important, especially fascinating with kind of the state of stocks, the state of risk on assets. So it's going to be fun to watch, and it's going to be fun to track your guys' coverage and your research on it, since you guys are operating at such a high pace now. For people that do want to track your research, keep up to date with things you're talking about, learn about your valuation models, everything, learn about your team, maybe individual investors or any funds that are listening want to subscribe, how do they do that? What's the best way?
Yeah. So, I mean, easiest way is just go to our website, delphidigital.io. You can see right there, our research. We have some free research on there. We actually had a Bitcoin report and entering the Ethereum report that we recently released. That certainly made some waves, you could say, within the crypto space. We've got a Delphi Digital Twitter account. All of us, myself and all my partners are on Twitter. So any medium that works for your viewers, I mean, feel free to reach out to us, drop us a DM, find our emails, drop us an email, connect with us on LinkedIn. I mean, kind of all over the place.
Definitely. I've actually one more question before we go, which might lead to a final, because you got me thinking on that Ethereum research. You guys are publishing about Ethereum 2.0, maybe some of the pitfalls and what could actually save Ethereum. And I don't want to talk so much about that, but at the beginning of your research, you talk about why, obviously Ethereum's subsequent decline, but originally the reason for a lot of that boom was for the token fundraising and the ICOs going through that. We're seeing that right now with exchange tokens, and there hasn't been a lot of discussion about whether or not this is sustainable. So far, it still seems to kind of be like a hush-hush, not talked about thing going on in crypto right now, where BNB is launching these tokens. They're performing incredibly well. Even if they're dumping on listing, they're still up 2 to 6x. You have almost 7 or 8 other exchanges racing to do this. Do you guys see, or do you have, I guess I should say, is there an unknown research piece coming out about this? Because I'd be fascinated to read about it. Do exchange tokens go through a similar thing that we saw with Ethereum? I think this is kind of a nice way to leave the interview, because this is something we're going to see play out in the next month, the next 3 months. I think a lot of them are kind of going through an Ethereum type boom. Right now, they are the credit. They are almost the investment bank, I guess you could say, of these projects, of these coins that want to launch. Is this sustainable? Do we see a similar cycle as we saw to ETH, for Binance Coin, for Huobi Token, for everyone else that's chasing the IEO hype right now?
I think, to your point, it's certainly been a trend and narrative we've followed recently, and it has gained, to your point, a lot of momentum. And you've seen, kind of some of those other exchange tokens really play catch up on Binance Coin, right? So, I mean, KuCoin shares is up something like 240 or 250% over just the last 30 days alone, which is obviously pretty insane. I definitely don't think that it gets to the extent that you had the ICO boom bust with Ethereum, because again, I think the market as a whole, which is a good thing, has moved more towards this kind of skeptical. It looks at this market through a much more skeptical lens, right? So a lot of these exchange tokens or things that are being launched via these exchanges are being looked at with a lot more scrutiny, which is again a great thing, because in that 2017 ICO boom, pretty much anything, the joke was, if you had a 5-page white paper, you could raise $50 million, because the access was right there in front of you, right? And it was such a crazy craze. Right now, I think people are operating with a lot more scrutiny, and they're a lot more skeptical about a lot of these things coming to market. So I just don't think that. I think that puts some real downward pressure on this kind of new exchange token narrative.
Okay. And what is there? I guess you can only. You don't have to tell me if you don't want to, but is there, what's the next research piece coming out? You guys put out the UTXO stuff, Bitcoin bottom, that was a hit. The most recent one, Ethereum, that was huge, and you guys talked about that on Laura Shin's. If anyone's listening, you should listen to Laura Shin's podcast with your other co-founders. What's the next big piece for you guys? What are you guys studying right now that you think not enough people are looking at, if you're allowed to share?
No. So we've got one coming out this week on looking at different privacy technologies and privacy coins. That's going to be part of our insights package, one of our kind of bi-weekly thematic pieces. We're actually putting out our crypto quarterly market outlook, macro market outlook next week. So stay tuned for that. We'll probably have a nice little Twitter thread for people to go through and kind of see some of our big takeaways. In terms of the next big kind of public report that's similar to Bitcoin and Ethereum, it's still TBD at this time. But as soon as we know, maybe I'll give you the inside scoop, and we can go from there.
Sounds good, Kevin. Thanks so much for coming on, man. This was fun. For anyone listening, Kevin's link is down below. Delphi's link is down below for you guys to follow what they're doing. Follow them on Twitter. Sign up if you want to see those research reports that are coming out next week. I know I'm going to be tracking them. I've dug into everything that I could get my hands on, and it's been eye-opening. You guys are looking at things in ways that are building on even if someone was looking at something a certain way, you're building on it and kind of taking it a step further. So it's been fascinating to watch. I'm going to continue to watch it. Big fan, and thanks for coming on, man.
Appreciate it, man. More to come.